As we talked about earlier, the other big focus for the market right now is the Fed. Today, the central bank policymakers began their 2 days of meetings. And as they decide on the direction of interest rates, our Steve Liesman surveyed strategists and money managers about their outlook for rates and the potential for a recession.
Growing concern about economic weakness both in the U.S. and abroad, along with increased trade uncertainty, has respondents to the CNBC Fed survey ratcheting up their chance of recession. It now stands at 30% probability of a recession in the next 12 months. That's the highest in 8 years for the survey. Just last month, it was at 22%. As a result of this increased concern about recession, the expectations for rate cuts in 2019 stands at 67%. 22% of the 45 respondents think the Fed will remain on hold. 11% actually forecasting a rate hike. On average, the group is forecasting just one 25 basis point rate cut from the Federal Reserve. But of those who think they are going to cut rates, they think there'll be 2 this year. When will this happen? 14% think the Fed might announce a rate cut as soon as tomorrow, but 29% say sometime between July and September. 23% say after September. Why will the Federal Reserve cut? The top reason is a weakening economy, followed by inflation running below the Fed's 2% target. Some believe the Federal Reserve will be reducing rates in response to the inverted yield curve, where short rates are above longer-term rates. Pressure from President Trump on the Federal Reserve to cut interest rates is seen as a small factor. Kathy Bostjanek, chief U.S. financial market economist at Oxford Economics, writes in response to the survey, the Fed will signal it stands ready to cut rates if downside risks materialize, but it does not want to preemptively lower rates before seeing evidence of much slower growth in the economic data. John Riding, chief economist at RDQ Economics, says, we have marked down our forecast because of the uncertainty surrounding trade negotiations. Even if there are no tariffs imposed on Mexico and the U.S. reaches a trade deal from China, there's the uncertainty that another shoe could drop. The trouble with forecasting the economy and the Fed stems in part from the trade uncertainty. Presidents Trump and Xi now appear as if they'll meet next week in Japan. A positive meeting could remove concerns about new tariffs, which sparked the latest hue and cry for rate cuts to begin with. Or it could all go the other way. For Nightly Business Report, I'm Steve Liesman.